Well, hello, friends. Hey, it's Jamie here with Reece Homes. I hope you're enjoying an absolutely wonderful start to your November. And we just wanted to give you a quick update on the November market with three market indicators. We wanted to talk to you about what they mean. And we also wanted to talk to you about our Santa picture and movie event coming up at the end of the month. So, the three indicators that we're watching right now: mortgage interest rates. They have flattened after about 6 to 8 weeks of mortgage rates continuing to rise. What we've seen over the last week is they finally flattened out. Now, mortgage rates peaked at about 7.25%, which is about double what they were this time last year, and certainly that's had a big effect on the market. But they've come down by about a quarter point to about 7% here with this flattening. Now, one of the surprise factors that we've seen is that the economy, despite all of the news about recession, the economy actually grew in the third quarter of this year, and it grew at a pace that was higher than what just about anybody had expected. Now, this doesn't mean that we're not going to have a recession in the future, because this economic news is actually bittersweet. With that economy growing, the economic growth fuels inflation, and certainly we'll want to get inflation under control. So you're going to see the Fed continuing to try to do that through rising interest rates, right? So what we fully expect is that we're going to see a slowing economy in the future as we get inflation under control. But this was good news in the fact that it doesn't look like the recession is coming as quickly as what we would think, and it may not be as drastic as what we think, or at least what some would anticipate. Now, the interesting thing is, how does this all affect the housing economy? Well, there's a lot of people who are frankly predicting and or hoping that housing prices are going to go down substantially so they can take advantage of that. Now, the interesting thing is, because we've had so many months of lead in to this recession talk, right, and the idea that the housing economy will contract, we've actually seen inventory stay relatively low. And there's two reasons for that. Number one, home builders have slowed their production of homes and their future plans for production of homes, and that's going to keep inventory relatively low. And then secondarily, we're not seeing the same kind of distress that we did during the last housing downturn where sellers had to sell their homes. What we're finding right now is that everybody is wanting to do something, and some people just want to do it more, so they're actually taking action right now, versus those who have less urgent needs are staying back and, frankly, taking advantage of their low interest rates on their mortgage right now and just staying comfortably uncomfortable in their situation, right? So what does that mean for everybody in the housing market right now? Well, the first one is economists throughout the housing sector largely agree almost all of the decline in activity right now is driven by interest rates. People who want to buy their first home, who want to buy a larger home, who want to downsize to a more comfortable home, or want to move closer to the things that they care about, still want to do these things. Many of those people still would like to do them tomorrow, but are putting those things on hold right now due to affordability concerns relative to interest rates, right? Once we see those rates shift, we're probably going to see the market shift as well into a more heavy demand scenario. And we expect this to happen in two waves. The first one is just acclimation to rates. When more and more people understand that it is extraordinarily unlikely that we're going to see 3 or 4% interest rates return anytime in the foreseeable future. As people acclimate to that and that reality, more people will start to move off of the fence and move out of their uncomfortable scenarios, whether that's renting or a smaller home or a larger home, whatever they want to make change, they'll begin to make that change as they just get more comfortable to the reality of these new rates. Secondarily, when we see the rates decline back to somewhere in this 5 and 6% range, we're going to see a much larger wave of demand, right, as things become more affordable. But that's probably going to be temporary, because that push of demand will likely drive up competition yet again. So what does that mean for people today? Well, there's an opportunity to take advantage of a calmer market. And today's calmer market with slightly higher inventory means that those people who are needing to buy and sell contingent can do that. If they have lower down payments or more adverse to what they would perceive as risk and offers, this is a definitely much more calmer market today that will be an advantage or an opportunity for them. And then as they look to the future, while they might have a high initial interest rate, they can refinance tomorrow when rates do finally drop, whether that's a year, 2 or 3 years from now. They can refinance at a lower cost overall and lower their annual housing cost during that time. So those are really wonderful opportunities. If you've got any questions about them, we'd love to chat with you about them. But let's move on. Let's talk about Santa picks. We are just absolutely thrilled to return to a relatively new normal, right? Really no restrictions on this event anymore like we've had in the past. And we're once again going to be hosting Santa picks. They're going to be Sunday, November 27th, Edmonds Theater. We're going to have free Santa pictures for you and the family, have holiday movies, and lots of treats and goodies and wonderful times with the friends of Reece Homes. And we'd love to see you there. If you've got questions or you want more information or to RSVP, please visit santa.reesehomes.com or click the link in the email. We'd love to see you there. Thanks for watching our November update. We look forward to seeing you at the Santa event, and we hope that you are getting a great start to the holiday season. See you soon.